Good evening, this is Nick Inman from VolumeProfileTrader.com on Saturday, February 11th, and we're going to cover the S&P, NASDAQ, the US dollar, the euro, and then a bunch of names, some which we've been all over and riding to the upside, and some new ones. So, go ahead and take notes, and hopefully, we have a productive session here. So, looking at the S&P, first things first on a daily chart. Friday, we finally got a slight pullback. It wasn't anything significant. However, any type of pullback is overdone. I look at this current uptrend that we have been in since the beginning of the year. If we just connect the lows, you can see we have, call it 15 more points of potential downside from where we closed from, to where then we get to the bottom of that trend line, which is also the point of control for the year. So that's that 1325 levels. It matters, and it's important. So we either continue trading sideways in the range that we've been in, call it we'll say 1330 or so on the downside, and 1345 or so on the upside. That's what we'll call it. Actually, let's go with 1350. And we're in this range, and until we break out of this range, it's warranted that you be cautious. We've been trending for 7 straight days, and now it's time for a little bit of a pause. If I bring in the hourly chart, what you can see is we are holding the point of control for February, and it will be interesting to see if we can hold those levels. Now, Greece has a vote tomorrow. If they end up voting, it's going to move the market, and we'll probably have some type of gap one way or the other. If that's the case, then potentially all of what I'm saying here could go out the window. So S&P, it looks good. This uptrend continues, but the potential for pullback. And let me say this: I would expect the pullback to be shallow. We're probably overdue for one. So the NASDAQ continues its route higher. On Friday, we didn't even make a new intraday low relative to Thursday and Friday combined. So I don't think anything's changed here. And it's pretty simple. Stay long this market. Have exposure to the upside, and expect the potential for a continuation higher. And I wouldn't be surprised if we saw 1500 on the S&P sometime by the end of this current rally. So the euro, this is something that's worth talking about. I don't think Friday's price action mattered too much, but one thing that we want to look at on the hourly chart, bouncing off point of control for February. So we do have some support here for the euro and the S&P, and if that matters, we will bounce off those levels. However, if I look at the dollar, we are right at the value area high for the year, so it should warrant some type of support. And another thing that's changed on the dollar just recently, we had point of control support at the bottom of the range, and then on Friday it changed and it went back to the top of the range. So we could see a nice sell point on the dollar from these levels. However, if we do continue higher, we'll probably try to run up to 80 on the dollar, and that's just something to be aware of. Oil, we're definitely in this trading range that I have highlighted, but we're going to make a move one way or the other probably soon, and I wouldn't be surprised. I would expect an upside move. However, I'm going to wait for the price action to let me know. There's really no clear-cut winner here. However, if we do continue higher, which I think we will, expect an opportunity to buy somewhere around $100. Now, Apple, this has been the monster trade since the beginning of the year, in my opinion. And on a percentage basis, it hasn't been. I mean, it's been a nice move. But it hasn't been extravagant or anything like. A lot of names have performed the same way, percentage-wise. But where I'm getting at with Apple is we may be at some type of top. Not only is it $500, that price level, but what I see is February's point of control right at the top of the range. That at least warrants some type of balance, and we're probably going to, this 496 to 492 level, I think it matters, and I think it's going to be a while until we see a continuation higher on Apple. However, I could be wrong. It's fairly rare that Apple runs this much without some type of pullback or consolidation. Now, with that said, investors are repricing Apple, and you can see that by the price action. So that's something to be aware of. Yahoo starting to poke its head out. I was recommending buying some out of the money calls, 17 or 18 strike, going out maybe to the summer, and just basically seeing what it does for you, and seeing. I wouldn't be surprised to see some type of breakout to the upside on Yahoo. It's probably warranted, and if the rest of the market continues to rise, Yahoo should at least have participation. IBM, it looks like this is poised to break out to the upside and continue higher. However, there's really no support on IBM. I guess you could say after earnings, you would have support around 185. You have pretty good volume at 191, and I'll bring in the hourly chart to show you. You can see 191 or so, pretty good volume for the last couple of months. You can see it on this composite. From there, we don't start printing volume until 87 or so. You can see the nice bottom we had there. So that's just something to be aware of. But I wouldn't be surprised to see IBM. What we're looking at here is really multiple month sideways range, and we'll look at the top being recent highs, and we have 4 down days versus, call it, 12 up days. I didn't count, nor am I going to, but the buyers are still controlling at the top end of this range. If we do get some type of breakout, although 200 is right there, I wouldn't be surprised to see a move, call it to 210 or so, before you see some type of selling pressure. And I think that's going to present some type of opportunity. Baidu looks like it's going to make a run to 145. I covered this the other day. I think you can use these recent lows at, call it 129, right below 129 as your stop. Now, it's ran a little bit, so that's something to be aware of. I wouldn't be buying big, but your target would be 145 or so on the upside. NVIDIA trying to capture this on a breakout. It's done well. It's trying to trade out of its range, and we want, if it does come back to test 15, what we want to see is a bounce off of those levels. So just wait and see. I am long a 16 by 17 call spread, and earnings are, I believe, this coming week. So that's also something to be aware of. SanDisk, what I like about this is it's sitting at the bottom of the bottom of the channel, the 200-day moving average, and 46 is the point of control for this range. So if you're going to take a shot at SanDisk, these are great levels, and you simply place your stop under these lows at right around $45 or so. So you're risking $1.40 to make potentially $5 or $6 on this trade to the upside. So not a bad risk reward ratio. Amazon, I do think this is trying to build a base, and the important thing that I'm looking at here is since earnings, which huge gap down, we've had 1 day of selling pressure. And though we've traded sideways in a range for the last week, what's gone on here is every day the market's opened, except for one, Amazon has traded. Buyers have come in and lifted the stock. So one other thing, point of control for the last 90 days at 177. So we like to see that under price. You can see the sideways consolidation we are in, and we've been in for the last month. But so long as we stay above, call it 180, Amazon's probably going to take a shot towards $195, $200. You look at $195, that's the point of control for the year. I do think that matters, so just something to be aware of. Price Smart, this is new. This is a new name that we haven't covered. Looks like it's going to try to break out and push towards $78, $80, which are the highs, and probably past that. I'd keep a stop under this most recent balance range. Right now that's at $64 or so that's pretty hefty risk, but if you want to start nibbling on Price Smart, I don't think it's a bad opportunity. American Express balancing at the top end of the range, not really going down but not going up. I think on weakness you want to be all over this and be a buyer. I wouldn't be surprised to see $60 or so on the upside in the coming months on American Express. Chesapeake trying to catch this bottom here, and it's just very slow. I was looking for a quick bounce. As long as we don't break below Friday's lows, I think we'll be alright. If so, then you look back at the lows that we've seen the last two times, around basically sub 21 but above 20. That's really your line in the sand. And if we break below that, then step back and reassess the situation. Comstock, this is a watch and wait, but I do think there's a potential for a decent bounce on this. And I'm being serious here. The low's at $11, and the potential trade to the upside would be the mid-15s or so. And that's not too bad. You make about $2.5 and risking $1. And, it's not the best risk-reward ratio, and you're definitely trying to call a bottom. But for the last couple of months, we have good volume support here. If we start to break above, I would say set a price alert above $12.80. If we start to trade above that, take a shot at it. And don't buy a ton, but buy some. And I would say the likelihood, and my target would be December's point of control. So I would call it more like $15.50. But I think the likelihood for a potential move higher is pretty great. You have no earnings risk because earnings just came out. So just be aware that there is a possibility for a move higher. Halliburton continues to balance in a range. Had a pretty rough day on Friday and underperformed the market. However, the point of control for the year is right at these levels. You do have 50-day moving average potential support there, though it hasn't mattered really at all. But you would look to $35 and look to see support. We do have not trendline support, but we do have potential trendline support coming too. So Halliburton, given an opportunity, and we should, so long as the market continues to hold a bid, we should see the mid-40s on Halliburton in the future. Johnson Controls, this is an opportunity to get long right at these levels. I would ultimately have a stop below 31, so you're risking about $2, I'm sorry, and the potential for a move higher, it looks pretty decent. Your target would be up around $39. Las Vegas Sands, pausing, but this is something that I think you want to be a buyer on weakness, just like American Express. If you look at, for example, MGM, it's doing very well. Wynn, not so much, but at the bottom of the value area for the year. Wynn's actually a pretty cheap shot, and I would say, as far as for right here, right now, which one would you want to be buying? I'd have to say, to be honest, Wynn. However, I'm playing it through Las Vegas Sands, and I'm looking for pullback to expose myself more to Las Vegas Sands. I still have a decent sized position. I took profits on in this range, $49, $50, and I actually ended up just buying it back the following day, and happy I did so. But we would like to see this thing continue to push higher. Monsanto, do not take your name off this. We bought the breakout. Actually, we bought back in the $69 range. And broke out, had a nice ride to the upside, got stopped out. I would look back towards 75, which is only $2 away. That's where I would really look for a bounce. You have huge volume support at 75. Value area high, 7, just right below that. So just keep an eye on it and realize I would actually start buying right here, right now. Unless if we have, like I said, Greece, the meeting, they vote, the market likes it or dislikes it, we're going to have a gap. Tech resources, bouncing off value area, or, well, we have high volume right below $39. So I don't think I still think you can get an opportunity to get at lower prices. However, tech resources opened, traded lower, and then closed on the highs of the day. So that's just something to be aware of. January's point of control, I'll bring it over, is right at 38.25, 38.30, something to be aware of. So I'd say tech resources looks pretty good for right here, right now. I'd buy small, but I think you can start nibbling on tech resources. Under Armour, I don't think you sell here. I think you continue to try to ride this to the upside. However, on weakness, I would look to be a buyer anywhere in the high 70s. Now, this is a new name, Wendy's. Remember, they spun off their Arby's, or they sold it back, I want to say summer of last year. And I've been watching Wendy's. I'm expecting it to have a breakout to the upside. And the reason why is because let's face it, Arby's is not the cash cow of that franchise, and you would have to say Wendy's is. And I look at these most recent lows as an opportunity. Start scaling into this, buy a fourth of a position on Monday, and try to get it on weakness and have your stop below the value area for the year, below these most recent lows, around $4.65. So yes, you have a little bit of risk, but the potential for an upside move. Well, let's zoom back out. Wendy's has not been above, call it $6, since the late 2008, summer 2008. Something to be aware of. So really, the upside could be easily $10. Could be a double. I wouldn't be surprised. So obviously, we're still in a range, but this $5 to $4.90 range is huge high volume, and we're starting to have pretty good consistent volume. And we also had a huge selling climax day on earnings, so that's something to be aware of. If you want, maybe something you could do is listen to the conference call and see what they're saying. ConocoPhillips, I like this for a breakout. I think we're going $78, $80. So look at the volume that we had on Tuesday, or Friday. Now it didn't move; it was only up 1%, which outperformed the market. But the amount of volume here, a lot of trading activity took place, which means this 72.5, 72.5 to 70 range, it matters, and we will see a nice move one way or the other. My expectations are to the upside, so possibly enjoy it. Now, Alpha Natural Resources, this has been a frustrating name. I don't think you take your eye off this, but realize that it's not working. It's still trading sideways. There's still selling pressure. Look at James River Coal. This looks like it's about to fall out of bed. Patriot Coal. I mean, these names all got hammered on Friday, and I wouldn't be surprised to see more selling pressure. However, look at Alpha Natural Resources. Until we break this $20 level, this point of control level, this trend line, I don't think that you sell it, especially to the short side. I still think the potential for an upside move is there. However, it's not there yet, and until it's there, I can't say that you should be buying this hand over fist. However, what I'm doing is having a placeholder position, and if it starts to turn around, then I will add. So, anyways, it looks like the potential for a market pullback's there. However, it's really up in the air, and we're going to see a move one way or the other. I wouldn't be surprised to see a week or so of consolidation, sideways movement. If that's the case, that may be enough to spur another upside move, and that's something to be aware of. So anyways, I hope this helps. Take care, have a good weekend, and I will talk to you on Monday.